Today we'll start with mutual funds practical questions part. Okay, last lecture we saw the concept book. Today we'll see the question bank. Okay, the first question is very much easy. You'll be able to solve it. Okay, so what you need to do is that you need to calculate the NAV per unit of the scheme Rudolph. So multiply the market price of the share divided by the minus your accrued expense and other current liabilities and divided by 10 lakhs, you'll get the amount. It is very much easy, so do it yourself. Next, question number two is good. Okay, question number two, for first question it is very much good, so we'll see what it is. A mutual fund company has the following assets under it on the close of business as on 1st February and 2nd February. Okay, so the company's name are given here, LMN and P Limited, and the number of shares are given and market price is on 1st and 2nd is given. Okay, so the next detail here, it is given as the total number of units is equal to 6 lakhs. Okay, so this will be used in NAV calculation. Okay, next, so what we need to do is calculate NAV of the fund as on 1st February. So how we will do it? Simply we'll multiply number of shares into the market price per share of the 1st February and divide it with 6 lakh, we'll get the amount. Okay, it has 78.83. okay, so this is my NAV of the fund as on 1st February. Now the following information is given. Okay, assuming that on 1st February 2025, Mr. A submits a check of 30 lakhs. Okay, Mr. A is a person who, assuming that on 1st February he gave a check of how much? 30 lakhs to the mutual fund, and the fund manager of this company purchases 8,000 shares of M Limited. Okay, so when did he give? On 1st February. How much? 30 lakhs. And how much did he purchase? 8,000. Okay, so we'll assume that he has given this amount on 1st February at 3:30 p.m. Okay, so we will buy the shares of what? Sorry, not 3:30 p.m. at 2 p.m. Okay, at 2 p.m. he has given us. Okay, so we are buying the shares of M Limited. Okay, so how much? 8,000 shares into how much is the price of M Limited? It is 312 into 312.4. So I'm getting it as 24,99,200. But how much did he give? He gave me 30 lakhs minus 30 lakhs. So this is the excess cash balance with me. Okay, excess cash balance I'm having as 5,800,000. Okay, and the balance amount is held in the bank. Okay, so 5,800,000 is held in the bank. In such a case, what would be the position of the fund? Now he is asking us that what is the position of the fund. What do you mean by that? Is that they are asking the net assets. Okay, what is the position of the fund? They are asking net assets. So what will be added? Okay, so the revised position as on 1st February we are going to see. Okay, so when we have this information, okay, let's suppose he has given the amount on at 2 p.m. okay, at 2 p.m. now we are investing. At the end of the day, how much is the price? 312. Okay, so what will be the revised position with this following information? So what will be the first thing we'll do is we'll normally do all the things. Okay, what is it? 20,000 into 20, 30,000 into 312, 20,000 into 361.2, 60,000 into 505. This is the actual figure which was prevalent in the on the 1st February only. Okay, now what is happening here is that he purchased 8,000 shares of M Limited, right? So M Limited into how much? 312, right? 3124. So now what will happen is that my M Limited shares will be increased by 24,99,200 plus what was the earlier amount? It was 93, right? It was 93 lakhs 73,000, 72,000. So now my amount is how much? 1187,200. Okay, the same figure is matching here. Okay, so this is the total amount. Now earlier there was no cash balance. Okay, now cash balance has been added. Okay, so my earlier amount was how much? 473,02,000. Okay, plus 30,000 has been added, right? 30 lakh has been added. That is 24,99,200 in M Limited, and 5,800,000 has been added in cash balance. So I'm getting the amount as 503,02,000. Okay, divide by now the total number of units. How many units have we issued to him? Issued to A Limited. Sorry, issued to Mr. A. Okay, so how much have we issued? This was the earlier one. 6 lakh was the earlier one. So how much did we give to him? How much units did we give to him? Okay, so we'll put this in M plus. Okay, and we'll calculate 30 lakhs divided by what will be the NAV. Okay, NAV as on 1st February we'll take, because that is the latest data that is available. On that value we would have given him the units. Okay, divided by what is my value? NAV. It is on 1st, that is 78.8366. Now they have said here is that round off the whole number and NAV up to 4 decimal points. Okay, up to 4 decimal points we'll calculate. Okay, units to whole number, we have to do units of whole number only. Okay, so what is the units I'm getting? I'm getting the units as 38,053. Okay, I'll ignore the 3914. Okay, so only 38,053. 38,053 plus how much? 6 lakh. So this is my new unit. 6,38,053. This is my new unit. So how much will I get? Divide equal to 503,02,000. I'm getting it as 783 only. We'll get the same NAV because we have done the following adjustment. Okay, and we have issued in the units as per the NAV only. So that's why we'll get same amount. Okay, next what they have said here is find the new NAV as on 2nd February 2025. As on to 2nd February 2025. Okay, new NAV of the fund as on 2nd February 2025. Now we have to find new NAV. Now we will take this information also. Okay, so here we got 8,000 shares of M Limited, right? So we will consider that also, and the total units is 6,38,000 only. Okay, now how it will change? Now 20,000 into 20.5 we have to do. Okay, the prices we have to take is on 2nd February. Okay, 2nd February, what is the number of prices we have to take it? Okay, 20,000 into 20.5, like that we have to take for everything. Okay, and then for M Limited, keep in mind we have to take 38,000 into the amount. What is the amount here? 360 into 360. Okay, so this will be the changing factor here. Okay, so if we do all of this, we'll get an amount and we'll divide it with 6,38,000. We'll get the NAV as 82.2609. Okay, we have to round it up to 4 decimals as it is, as in question it is said. Okay, so it was fairly an easy sum. Okay, you can practice it. Next, question number 3 is homework, because it is same as question number 2, so I'm not gonna solve it. It is very much easy, you can do it. Okay, here they have not given us 1st February and 2nd February, only one date is given, that is MPS. Okay, so you can do it. Okay, as on 1st April, this one is quite easy. Okay, no, 2nd April data is also given here, so they have given it separately. Okay, so we can find it. Now question number 4, it is a good question but it's very much easy. Okay, I'll tell you how it is. A mutual fund made an issue of 10 lakh units of rupees 10 each. Okay, 10 lakh is the face value and they have issued 10 lakh units into 10. So how much would you have received? It is 1 crore. Okay, on 1st January 2025, no entry load was charged. Okay, no entry load, that is the addition which you charge to be a member of the mutual fund is not charged here. It made the following investments. Okay, what investments it made, we'll see. Okay, it made 50,000 equity shares of rupees 100 at 160. Okay, we get 80. okay, 80 lakhs, and 7% government securities, 9% debentures, 10% debentures unlisted, okay, listed. So we get a total of 98 lakhs. So how much did we receive? 1 crore. But how much did we invest? We invested only 98 lakhs. So how much is the remaining balance? 2 lakhs is my cash balance. Next, during the year, dividend of 12 lakh were received on equity shares. Okay. All interest on all types of debt securities was received as and when due. Okay. So what they are saying here is, now they are talking about the income part. Okay, 12 lakh is received. Okay, in anywhere in the question have they given a cash balance? No, there is no cash balance, so we have to find closing cash balance. Okay, so for this we have to use this information. Okay, let's see if there is any more amount that can be used in finding cash balance. Okay, at the end of the year, equity shares and 10% debentures are quoted at 175% and 90% respectively of the face value. Okay, now what they are saying is equity shares and 10% debentures that is listed. Okay, 10% debentures, they are quoted at 175% of the face value. My face value is 100, so 175%. So 50 into 175 is my answer. Okay, next 10. We'll assume it as 10% debentures. We'll assume it as the face value as 100. Okay, and it is quoted at how much? 90% of the face value. So we'll do it as so how much is it? 50,000 into 95 will do. Okay, so this is my this is my investment at market value. It will be used in calculation of net assets. So at that point it will be used. Okay, other investments are at par. Okay, this will be same. 8 lakh and 5 lakh will be same. Next, find out the net asset value per unit given that the operating expenses paid during the year amounted to 5 lakhs. Okay, now they are saying that operating expenses, that is my expenses which has gone out of my hand, that is it will affect my cash balance. Okay, so out of my cash balance I will deduct how much? 5 lakh. Okay, also find the NAV if the mutual fund had distributed a dividend of rupees 0.8 per unit during the year to all unit holders. Okay, now they have first what requirement they have said that find out NAV. Okay, first we'll do. Next we'll do if the mutual fund had distributed a dividend of 0.2. Okay, we'll find out next. First what you have to do is, this is what the mutual fund has distributed dividend of 0.8. Okay, this dividend, this 12 lakh was received from the 50,000 equity shares which we have invested. And the later part in this question is that mutual fund has distributed dividend. Okay, this is a dividend payout ratio, dividend payout plan. Okay, so here they have distributed a dividend of 0.8. Okay, this we will see later. First we have to find what? First we have to find NAV. So how do we find it? Okay, I'll solve it in the calculator. We have to find what? We have to find first closing cash balance. Okay, for net assets we have to find. So step 1 is net assets. Okay, so first what we do is that we take investments at market value. Okay, so first thing we do that, and next we do is closing cash balance, right? So what is my closing cash balance? My closing cash balance, if we have to find it, so 1 crore I have received, right? So 10 lakh into 10 I received minus 98 lakh I invested in the securities. So remaining amount is 2 lakhs with me. Okay, plus what is happening here is that I'm getting dividend of 12 lakhs a year. Okay, 12 lakhs I'm receiving. Okay, so I'll add it. Next, interest on all types of debt and debt securities were received as and when due. Okay, all these debt instrument securities, okay, we have received all the interest part. Okay, so how will we calculate it? 8 lakh into 7%. We got all of this. Okay, so I'm getting an amount of 15,51,000 as the income part. Okay, now what is happening here? This equity shares of 10% and 10% debentures, it is used for calculating the market price of the securities. Now what we have to do is we have to find closing cash balance. What all cash balance is given here? Given that the operating expenses paid during the year. Okay, it is not due. it is paid during there. So what is happening, it would have gone from my hand. Okay, it is my cash expense. So minus, I'll do cash expense. How much? 5 lakh. Okay, so what is my closing cash balance? It is 10,51,000. Is it matching with my answer? Yes, right? Net cash balance at the end is 10,51,000. Now what we have to do is we have to find net assets. So what is net assets? It is investment value on the NAV date at market value, okay, plus my closing cash balance minus any accrued expense, okay, whatever liability it is. So there is no liability given here, so we will calculate directly. Okay, so we'll take all the assets, okay, all the assets. So how will you do it? All the assets, my equity shares, it is how much? 100 each, right? So it is valued at 175% of face value, so 175. So 100, see, 100 into 175%, it is 175 only. Okay, into what? Into 50,000 equity shares I've invested, right? Into 50,000. So my value is how much? 87 lakh 50,000. Earlier it was 80 lakhs. Okay, 7 lakh 50,000. The value is appreciated. Next, they have said that the debentures are listed at 90% of the face value. Okay, so what is 90% of the face value? So 5 lakh into what? 90%. So it is 4,50,000. Okay, rest all are in valued at par. Okay, it is given as other investments at par. So we'll take it as 8 lakh plus 5 lakh. So I'm getting an amount as 1 crore 50 lakhs. Okay, 1 crore 5 lakhs plus, I don't know what it is, but we'll take it. 10,51,000. Okay, so I'm getting an amount as 11,51,000. Okay, so it is how much? 1 crore 15 lakh 51,000. Okay, this is my amount. So, and what is the amount units I issued earlier? It was 10 lakhs, right? So 10 lakh, if I divide it, my NAV is 11.551. Okay, so how much is the? There is no decimal given here, so we will round off to 2 only. Okay, 11.55 is my NAV. Okay, now what they are asking is that if the mutual fund had distributed a dividend of 80 per unit, 0.0 per unit, 0.80 per unit during the year to the unit holders, so what will be the NAV they are asking? Okay, first we have to find NAV. Okay, this I had calculated. Now this NAV you have to calculate that the mutual fund had distributed a dividend of 0.8 per share. Okay, so 10 lakh into 0.8. Okay, so I'm getting what? I'm getting 8 lakh. 8 lakh I have to distribute the dividend. Okay, since I'm distributing dividend, it is a cash expense, so we'll minus this from cash only. What was my cash balance? It was 10,51,000. Okay, 10,51,000 we had calculated here. Okay, minus 10,51,000. So how much I'm getting? It has 2,51,000 is the cash balance. Okay, plus my rest all remains the same, right? It is how much? 2,51,000 minus, plus 11,551,000 minus 10,51,000. So 10 lakh, 1 crore 7 lakh 51,000 is my amount, right? So divided by how much? 10 lakhs. I'm getting it as 10.751 or 10.75. Okay, this is what? This is my NAV if it had distributed dividend of 0.8. Okay, this was a very easy question. Okay, you can do it on your own also. I've just shown you in the calculator. Okay, next what you are going to do is we are going to solve question number 5. Okay, it is also very much easy, just keep logic in mind. Okay, a mutual fund has made an issue of new fund offer NFO. Okay, it has new fund issue of new fund offer on 1st January 2025 of 10 lakh units, okay, of rupees 10 each. Okay, now what is the units? It is 10 lakhs. And what is the face value? It was 10. Okay, how much amount did it receive? 1 crore. No entry load was charged. Okay, fine. Now 25,000 equity shares of XYZ Limited, 100 each, 320. At 320, I'm getting it as 8 lakhs, 80 lakhs, and 5% government securities, all the fixed income securities they have invested here, and total of 99 lakhs they have invested. So how much is my cash balance? My cash balance is 10 lakhs into 10, 1 crore, minus 99 lakhs, it is 1 lakh. Okay, 1 lakh is my remaining cash balance. Next, during the year, dividends of 8 lakhs were received on equity shares. Okay, dividends of what? This equity shares. Okay, not that I have paid. The equity shares where I have invested, they have given me how much? 8 lakhs dividend. Okay, now interest of all types of debt and securities were received. Okay, so here also they have said that interest on all types of debt securities were received as and when due. Okay, so there is no issue here. We got all the interest. Next, on 31st December 2025, equity shares were appreciated by 15%, while listed debentures were quoted at 20% premium. Okay, so what they are saying is that on 31st December, that is the end of the year, they have got the equity shares appreciate by how much? 15%. Okay, were appreciated by 15%. So 80 lakhs into plus 15%. Okay, so 92 lakhs is my amount of equity shares. Next, and debentures were quoted at premium of 20%. Okay, so how much was it? 10 lakh into 120%, right? So it is 12 lakhs. Next, XYZ Limited on 15th December in its AGM paid interim dividend of 10%. Okay, interim dividend has been paid by whom? XYZ Limited. Who is XYZ? My invested security. Okay, now, and bonus shares at 1:10 with the record date of 28th December 2025. Okay, it is within the year. Okay, it is within the year. And how much is the bonus share they have given? It is 1:10. So how many shares did we hold? We held 25,000 shares. And how many bonus shares are we gonna receive? It is 1 divided by 10, right? So it is 2,500 bonus shares we are gonna receive. It is not in cash, it is in kind. Okay, so extra 2,500 bonus shares we are gonna get. Okay, so at the end of the year, when we value the investment, okay, the value which will be how much? 25,000 plus 2,500, right? So this will be my 27,500 will be my equity shares. Okay, just keep that in mind. Next, find out the NAV per unit as on 31st December, given that the operating expenses paid during the year amounted to 3 lakhs. Okay, operating expenses paid during the year means what? It has went out from my hand and I had to pay from my cash. Okay, so out of cash we'll pay it. Okay, so we'll do it this one. The first one we'll do. Find out NAV as per the unit. Okay, so how will you find it? First we need what? First we need closing cash balance, because there is no cash balance given here. So what is the cash balance? So first we calculated it that we had 1 lakh remaining. Okay, 1 crore we got and 99 lakhs was invested in the securities. We had how much? 1 lakh in hand. 1 lakh plus. Next, how much dividend did we receive? It was 8 lakh. And interest on all types of debt securities were received. Okay, so how much was it? 4 lakh into 5%, 5 lakh into 10%, and 10 lakhs into 8%, right? So I got how much till now? It is 10 lakh 50,000. Next, what is happening here is that on 31st December appreciation value, this will be used for my finding investment at market value. Okay, this is not relevant for my cash, so we'll move on to the cash part next. Next, XYZ Limited, okay, it paid what? Interim dividend at the rate 10%. Okay, interim dividend it paid how much? 10%, right? So how much would I have received? Okay, 10% dividend, right? So how much would we have received? It is 25,000 into 100 into 10%, or 27,500 into 100 into 10%. See, your bonus shares do not get dividend on the year when it is, see, I don't know, we'll see here. Okay, what is your thing? Interim dividend, I'm getting it as 25,000 only. Okay, so the logic which I'm saying is right. Okay, so what it is that the bonus shares was declared after 28th December. Okay, it was interim dividend was declared on 15th December and bonus shares was received on 28th December. So as on 15th December, I don't have any bonus shares. So that's why we will calculate 25,000 into 100 into 10%. Okay, so this much I'll receive as interim dividend. Okay, Next, bonus shares is not in cash, so we will not consider it. Next, what is that? My operating expense is how much? 3 lakh, right? So this is my closing cash balance. It is how much? 10 lakhs is my closing cash balance. My closing cash balance is 10 lakhs. Okay, now what is my net assets? Okay, net assets is how much? 31st December, the equity shares were appreciated by how much? 15%. So 80 lakhs into plus 15%, I'm getting it as 92 lakhs plus 12 lakhs I calculated earlier of 8% listed debentures, plus these are valued at par, right? Since it is not given in question, so we will assume that all the other securities are listed at par, are quoted at par. Okay, 4 lakh plus 5 lakh. So this is my net assets. Okay, net investment value plus how much? Plus 10 lakhs. Okay, there is no accrued expense. Okay, so we'll not consider this. Now, another thing is that we did not record what? We did not record this thing, bonus shares. Okay, so we have to record that also. Okay, 2500 into how much? Into 320 plus 15%, right? Plus inverse. So 13, how much is it? 1 crore 32 lakhs 20,000 is my net assets, right? Divided by how much? Divided by 10 lakhs was my units. It is how much? 13.22. Okay, 13.22 I'm getting. Okay, next, find out the NAV if mutual fund had distributed a dividend of rupees 0.50 during the year to the investor. Okay, now this is similar to question number 4. Okay, so what it is asking is dividend of 0.5 was distributed, right? So it will be going out of my cash balance. So how will we do it? We'll just have to deduct 10 lakh into 0.5, okay, minus my 10 lakhs, right? So plus it is 1270 divided by, so I'm getting it as 12.72. Okay, second one I'm getting answer as 12.72. Very much easy. Next, the third, if you are an investor, find out what is the annualized return you have got in second case. Okay, so what is my annualized return? Annualized return here means that how much return have you got. This we will discuss in the third part. Okay, I'll just tell you the basics of it so we can solve this part. Okay, so what is my return? If you have learned in a securities valuation chapter, how do we calculate return of a security? It is D1 plus P1 minus P0 divided by your P0, right? So this is the formula we use in security valuation to find out the return of a security, right? So here we will use the same concept. So how much dividend did we get? It was 0.5, right? So what is my P1? What is my P1 is the end of the year share value. Okay, we will consider NAV as my share value. Okay, so how much was it? 12.72, right? Minus what was my initial value? It was 10 plus. So I'm getting my annualized return as how much? 32%. Okay, 32.2%, right? It was very much easy. Okay, next, question number 6. It is also quite easy. Okay, we just have to look at it with some logic. Okay, what it is we'll see. But on 1st April 2025, ABC Mutual Fund issued 20 lakhs units at 10. Okay, how much did it receive? 2 crores. Okay, and the number of units is 20 lakhs. Relevant initial expenses involved were 12 lakhs. Okay, this is something new, but it is covered in the notes. Okay, initial expenses involved was 12 lakhs. So what we had 2 crore. Okay, minus 12 lakhs has been incurred as initial expenses. Okay, it invested the funds so raised in the capital market to build a portfolio of rupees 185 lakhs. Okay, minus 185 lakhs. Okay, so I'm having a closing cash balance of how much? 3 lakhs. Okay, Now 3 lakhs is my closing cash balance. Next, during the month of April 2025, it disposed of some of the instruments costing 60 lakhs for 63 lakhs. Okay. So the value of instrument was how much? 63, but its cost was 60. So how much did I gain from it? 3 lakhs. Okay. And used the proceeds in purchasing the securities for 56 lakh. Okay, so how much did I receive? We are just calculating the cash balance. Okay, so how much did I receive? 63 lakhs, right? Plus 63 lakhs. Okay, minus how much did we spend for purchasing securities? It was 56 lakh. Okay, I'm having closing cash balance as 10 lakhs right now. Okay, fund management expenses during the month was 8 lakhs. Okay, of which 10% was in arrears. Okay, what is in arrears? Arrears means what? It was not paid. Okay, so how much did I actually pay from my cash balance? It was 8 lakh into 8 lakh minus 10%. It is 7 lakh 20,000. Okay, so M minus MRC. Okay, I'm having a total cash balance as 10 lakh I had. Okay, minus 7 lakh 20,000. I am having extra 2 lakh 80,000. Okay, now what they are saying, in the April 2025, the fund received dividends of 2 lakhs. Okay, it received how much? 2 lakhs. Okay, and it distributed 80% of its realized earnings. Okay, so now this is important. Okay, now what did it do? It received 2 lakhs. I am having cash balance as 4 lakh 80,000. Now what it is saying is that it distributed 80% of its realized earnings. What is my realized earnings? Okay, 4 lakh 80,000, just keep it in mind. Okay, 4 lakh 80,000, we'll keep it in mind. How much did it distribute as realized earnings? It was 80%. What is my realized earning? First one was 2 lakhs. Okay, this has to be distributed. Next, this thing, my instrument costing 60 lakhs was sold for 3 lakhs, 63 lakhs. Okay, so 3 lakh was my capital gain, right? So 3 lakh was my capital gain. Okay, so 5 lakh into how much? 80% I have distributed as realized earnings. Okay, into 80%. So this amount has to go out from my hand. Okay, minus 4 lakh 80,000. Okay, so I'm having cash balance as 80,000 in my hand. Okay, on 30th April 2024, the market value of the portfolio was 198 lakhs. Okay, I invested how much? 185 lakhs, but on 30th April it became 198 lakhs. Okay, very good. Plus how much? 198 lakhs, right? Now what did I do? I just did closing cash balance plus my net assets, right? My investment value on the end of the period. Okay, so I'm having a total of 1 crore 98 lakhs 80,000 as my closing balance. Okay, net assets. Okay, divide by how much is my how much units did I issue? 20 lakhs, right? So I'm getting the amount as 9.94. Okay, is it matching? No, some difference here it is. Okay, so why did the difference arise? Because if you see in the notes, while calculating NAV, we do what? Market value, accrued income if any, plus closing cash balance, minus what we do? Accrued expenses. It includes what? Arrears of expenses. Expenses payable. What is the arrears of expenses? It was 10% was in arrears. What? Fund management expenses. So how much did we had in the hand? Okay, how much was in arrears? It was my liability, right? So how much was in arrears? Into 20 lakhs. Okay, minus how much? 7 lakh 20,000 we gave from the cash. Okay, 10 lakh was arrears. Okay, minus 8 lakh. This has to be given at some point, right? So we have to divide it. Okay, we have to less it. So how much am I having? 1,98,000 only I am having. Divide by what? Divide by 20 lakhs. So I'm getting it as 9.9. Okay, so this is my closing NAV. Okay, understood? Next, Mr. Akash, an investor, subscribed 100 units on 1st April 2025 and disposed of the same at the closing NAV of 30th April 2025. What was his annual rate of earnings? Okay, what we have to do here is we have to do D1 minus D0, sorry, P1 minus P0 plus any dividend received during the year, okay, and realized earnings, that is your cash, capital gain, and this thing, dividend. Okay, so how much did we actually distribute? It was 2 lakh plus how much? 3 lakh. Okay, 3 lakh was my capital gain into 80%, right, divided by how many units? 20 lakhs. So that 1%, 1 unit, how much is the amount? Okay, 0.2, right? Okay, this will m plus it plus how much was the NAV? At first it was 10. Okay, we did not need this. 9.9 was the end of the year minus 10 was the beginning of the year. Okay, plus MRC. Okay, 0.1 divided by what? 10. I'm getting it as 1%. Okay, I'm getting it as 1%. So what are they asking is annual rate of earning. Okay, into this was for 1 month, and for 12 months how much is it? It is 12%. Okay, so that's what they have done here. Very easy question. Just you have to keep it in mind that 80% was distributed, and realized earnings includes your dividend plus your capital gain. Okay, you just have to keep the notes in mind. Next, question number 7 is easy, but there is some points in it. Okay, we'll see what it is. Based on the following data, determine the NAV on per unit basis of a regular income scheme on per unit basis. Okay, listed shares at cost. Okay, at cost they have given here. Cash in hand is given here. Cash in hand is given here. Okay, so we need not calculate closing cash balance. Bonds and debentures at cost is given. Of these bonds not listed and quoted, it is 1. Okay, bonds and debentures at cost is 4. Of these 4.3, bonds not listed and quoted is 1. Okay, so how much is my listed debentures? It is 3.3. and how much is my unlisted debentures? It is 1. Okay, other fixed interest cost securities at cost is 4.5, right? Dividend accrued is 0.8. okay, it will be added when calculating NAV. Okay, when calculating net assets. Amount payable on shares is how much? 6.32. okay, it is payable. Amount payable on shares is 6.32. This is my expense payable. Okay, expenditure accrued is 0.75. this is also my liability. Number of units is 20 lakhs. Okay, current realizable value of fixed income securities of face value 100. Okay, now what they are saying is that if I have to sell my fixed income securities in the market, which is having a face value of 100, I'll get 106 rupees. Okay, so this information is not relevant because we'll see it. No, if we are selling or if the mutual fund is going bankrupt, then we'll see it, but it is not relevant here. We'll see why later in the question. The listed shares were purchased when index was 1000. The present index is 2300. The value of listed bonds and debentures at NAV date is 8. Okay, so they have directly given here. Okay, now there has been a diminution of 20% in unlisted bonds and debentures. Okay, unlisted was how much? Not listed and quoted is 1. So 20% diminution means what? 80% value. Okay, 0.80. Other fixed interest securities are valued at cost. Okay, other fixed interest securities are valued at cost. It is 4.5 only. Okay, listed part is how much? 3.3 it was earlier. Now it is 8. Okay, so we do not take this 4.3. Okay, next, calculate the figure in crores up to 2 decimal points. Okay, we'll do it. So since here there is no requirement for calculating cash balance, we won't calculate. Cash balance is given in question. We just have to directly calculate NAV. How do we calculate NAV? First we have to do what? First we have to take cash in hand. Okay, it is 1.23. Okay, we will take in crores only. 1.23 is a basic figure. Now what we do is that we have to find market value of securities. Okay, it was how much? 20. What was the time when it was invested? It was, the market was 1000. Now it is how much? 2300. 20 is 1000 and 2300, how much is it? We'll do cross multiplication into 2300 divided by 1000, right? So my value of securities is, value of shares is 46 crores. Okay, now what they're asking is this one I have done. Next, bonds and debentures, value of listed bonds and debentures is 8. Okay, plus 8, and there has been a diminution of 20%, so 1 crore it is 0.8, right? Next, other fixed income securities are valued at cost. Okay, we'll do it, plus 4.5, right? So 59.3 is my value of securities, plus I'll do 1.23 as the cash balance, right? So I'm getting it as 60.53. Okay, now this is my value of total assets. Okay, minus what you have to do is we have to deduct the liabilities. Okay, what are all the liabilities? Okay, there is another dividend accrued. This is also my asset, right? So how much is it? 0.8 plus 0.8. Okay, 61.33 minus amount payable on shares. It is my expense. Okay, 6.32. Okay, this is my liability minus expenditure accrued 0.75. So minus 0.75. Okay, these were all the information. Okay, both of these were other liabilities, right? Now we'll divide it by 20 lakhs, divide by 0.2. So I should get my NAV as 271.3 rupees. So how much is my NAV? It is 271.3. Okay, this question is solved. Okay, just keep in mind that current realizable value of fixed income securities, it is irrelevant, because they have said that other fixed interest securities are valued at cost. Since it is valued at cost, so why do I need to take this, right? If it was in realizable value, that if the question said that I have to calculate in realizable value, then this information would have been relevant. Since they have told that other fixed interest securities have to be valued at cost, we will take it at cost only. Okay, so this was also easy. Next we'll move on to question number 8. Question number 8 is good question. Okay, question number 8 is a good question. We'll see what it is. The following particulars related to S fund schemes. Okay, what it is: investment in shares at cost is they have given here. Next, investment in bonds they have given here. Okay, now number of units outstanding in crores they have given here. Expenses payable, it is my liability. Cash and cash equivalent is given here. Okay, so directly it is given in question. We need not take we need not calculate closing cash balance. Next, market expenses on listed bonds, it is 8.842. okay, this what it is we'll see. Okay, market expectation on listed bonds, it is 8.842. It means what is that the amount which you get in bonds, okay, in market, the interest which you are getting in market, they are valuing it as 8.842. so how we'll do it, like this a question. Okay, 16,000 we had, no, 16,000 into, see we had 24 lakhs, right? 24 crores is the value. Okay, into 14%, I'm getting as 3.36 divided by 8.842%. Okay, I'm valuing it at 8.842%. okay, I want this much return. Okay, since market expectation is this much, so my value of the bond at the market will be 38 lakhs. Okay, they are valuing it at 8.842%, so we'll divide it so that we'll get the amount. Okay, so 38 lakhs is my value of listed bonds. We will use it while calculating investment at market price. Next, the fund has incurred the following expenses: consultancy, office expense, advertisement expense. They are given certain questions, certain things, but it is irrelevant because in question they have already given as cash and cash equivalent. We will use that. This is after considering this amount has been arrived after considering all these. Okay, so this is irrelevant. Next, particulars related to each sector are as follows. Pharmaceutical companies purchase index and purchase date, okay, index and valuation date, okay. Each and everything is given here, okay. So we have to do what? We have to do cross multiplication, okay. So we'll get the answer. Now what we have to do is we have to calculate the net asset of the fund. What is net asset? It is investment, okay, plus my accrued expenses, sorry, my investment, okay, plus my cash and cash equivalent minus my expenses payable, that is my liability, right? So how do we do it? We'll see. So here we have to first take all this in market value. So how we'll take in market value? It is 158. It was when it was at cost, right? It was on purchase date, it was 300. So what is the value now? Into the index now is 500. 500 divided by 300. Okay. So it is 263.33. Okay, this is the value of my pharmaceutical companies, and all the other industries we have to take the things. Okay, we have to take market value. We'll take market value, right? Take market value and we'll get an amount, right? Investment in bonds, listed bonds, as I told you, 24 into 14% divided by 8.842%. As in the market, they are expecting that 8.842%. Okay, so we will divide it. Okay, market expectation will reflect in the market price, so it is reflecting as 38 crores. Okay, unlisted bonds, it is valued at cost 14%. Okay, 14, and cash and equivalent is 3. Okay, less expense payable, we are getting the net assets. Okay, now NAV we have to calculate. Next, what they are saying is NAV per unit. So this amount divided by 8.4, right? 781.209 divided by 8.4. I am getting it as 93.00, right? So 93.00 is my NAV per unit. We are rounding it off to 2 decimals, right? So we have rounded it off. Next, what they have asked here is determine the net return annualized if the period of consideration is 4 years and the fund has distributed 2 per unit per year as cash dividend during the same period. Okay, so I'll write it and show you how to do this. Okay, so what they're saying is that the period of consideration is 4 years. Okay, so 4 years is the time limit. Okay, 4 year is the time limit, right? 4 years. Okay, now what they are asking is net return annualized. Okay, so we will take what is the thing? What is the formula? Formula is D1 plus P1 minus P0 divided by P0, right? This is the formula. Okay, into it is for how many years? It is for 4 years. But what how much period do we need it? For 1 year. Okay, this is for 4 year. This is for 4 year, right? So we'll divide by 1 by 4, right? We need it for just 1 year. We need annualized return. Okay, so how do we calculate it? Do we have D1? We have 2 rupees. Okay, cash dividend as 2 rupees plus what is my P1? P1 is my NAV as on date. Okay, so it is how much we got in answer as 93, right? So plus 93. What is my P0? P0 is the NAV that I purchased. Okay, so for how much rupees did I purchase it? Is it given in question? It is not given in question. So we have to calculate P0. So how do we calculate P0? So P0 is equal to we'll just take all of this in face value divided by 8.4. Okay, so that should be my P0, right? That should be the amount that they would have invested first. 158 plus. See, why are we not taking expense payable and cash equivalent? Because expense payable is just for 1 year. Okay, it would be in the recent years, and next cash and equivalents, it is ever changing. Okay, so we don't know, it is of the current year only. We'll assume it as current year, so we'll not take it. Okay, so that's why we are just taking this divided by 8.4. We are assuming that the number of outstanding is same. in the first year, plus 62 plus 112 plus 68 plus 20 plus 24 plus 14, right? So 458 is the initial investment amount divided by how much? 8.4. So my earlier thing was how much? 54.52 divided by what is my P0? 54.52 into 1 by 4. So how much are we getting? 93 minus 54.52 plus 2 divided by, see, this 2 is for what? Per year. Unit per year as cash dividend. So it will not come here as 2, it will come here as 2 into 4 years. For 4 years I am getting, no, this, my, what is my time? Time is 4 years, right? So 4 years I am investing. So this will be how much? 8 plus 93 minus 54.52 divided by 54.52. Okay, my total return is how much? 0.85, but I need it for 1 year only. Okay, divide by 4. So what is my annualized return? It is 21.31. So simple it is. Okay, so 21.31 is the annualized return. Okay, it was very much easy. Okay, just apply your brain and logic, you will get the answer. Next, question number 9 is good. Okay, they have I've marked it here as good. It is a good question. We'll see what it is. Okay, there are two mutual funds, which is D mutual fund and K mutual fund. Okay, each having close-ended equity schemes. Okay, what is close-ended equity schemes? We saw basis of structure, right? On the basis of structure, there was two schemes. For the first one was open scheme, that is your regular mutual fund, which will have regular plans like your dividend payout plan, your dividend reinvestment plan, your growth plan. Okay, it is your regular scheme. And your close-ended scheme means what? The mutual fund issues only certain amount of units at the beginning of the period, and it is continued for every year. Okay, and it is, the NAV is decided by the market forces, that is your demand and supply. Okay, so it is that case. It will be treated as what? It will be treated like your equity shares. Okay, NAV as on 31st December 2025 on equity shares of D mutual fund is 70.71. Okay, NAV is what? NAV is your net assets minus your current liabilities. Sorry, net assets, right? What is your net assets? Is total assets minus your current liabilities. So it is how much is it is given? It is at 70.71, consisting 99% equity and remaining cash balance. Means what they are saying is that the value of equity is, how do we calculate net assets? Net assets, let's assume that here there is no liability. Okay, so we'll take the total assets as net assets. Okay, net assets is equal to what? Is equal to your investment plus your cash balance, right? So what they are saying here is, my net asset is 70.71. 70.71 is my net asset, and out of it 99% is of equity shares and remaining cash balance. So out of it 99% is my equity and 1% is my cash, right? So what is the amount here? 70.71 into 99%. So I'm getting it as 70.00. Okay, here in question they are given here as, take decimals here, have they given here? Since it is not given here, we will take it as 2 decimals only. Okay, NAV will be calculated in 2 decimals. And cash is how much? 70 minus 70.71, it is 0.71 is my cash. Okay, this portion is my cash, rupees. Okay, this is per unit. Okay, per unit cash balance is 0.71. Next, what they are saying is that K mutual fund is 62 and consisting in 96% and balance in cash. We'll do it later. Okay, next, what they are saying here is, following as the information given here, equity schemes D mutual fund and K mutual fund, Sharpe ratio, Trainer ratio, standard deviation. Now you might ask me, why is this given here? We are doing mutual fund chapter, why is portfolio chapter coming here? You might ask, but here in this question we'll have to solve it. Okay, so what is the relevant data here? There is no change in portfolios. We'll see what we'll do, what we can do with this data. Okay, there is no change in the portfolios during the next month, and there is no change in portfolio during the next month. Okay, there is no change in portfolio means what? The portfolio will remain the same and the things will remain same. Okay, during the next month, and average annual cost is rupees 3 per unit. Okay, cost is 3 per unit. Cost means what? Cost means per unit cost is 3 rupees per year. Okay, per year it is 3 rupees for both the mutual funds. If share market goes up by 5% within a month, okay, calculate expected NAV after a month for the both schemes. Okay, for calculation consider 12 months in a year and ignore number of days for a particular month. Okay, they are telling it as calculate in number of months only. Now what they are saying is that we have to calculate NAV. How will we calculate NAV? Let's suppose it was issued on what, 31st April, 31st December the mutual fund was issued. Now they are asking for what, 31st January they are asking. Okay, so how will we calculate it? So what we need for NAV, what we need to, what they are asking is that for we need to calculate NAV. Okay, NAV is equal to what? First we need to find net assets. Okay, net assets. Net assets is what? Net asset is my equity shares. Okay, equity shares plus my cash balance, right? Equity shares plus my cash balance. What is my equity? It is 0.71. 70 rupees. Okay, 70 rupees is my cash balance. But I need to find it for 1 month later. For 1 month later, the share market goes down by 5%. Okay, since it goes down by 5%, what is the, how will I calculate it? Since our we need to find beta. If our beta is 1, we will deduct, we will go with the market. Okay, our beta should be 1. Okay, if it is not 1, then we have to calculate beta into the market return. Okay, our market return will not be equal to beta. Okay, it will not be equal to 1. We will assume they have given here the ratio. We'll see if our market beta is 1. Sorry, if our beta is 1, we will do minus 5% only. Okay, cash balance is required. Cash balance do we have? It is how much? 0.71 at the start of the year. So how will we do it? First we need to calculate equity. Okay, for equity we are calculating. The first thing what we need to do is we need to calculate beta. Okay, how do we calculate beta? So what all information is available here? Sharp ratio is available here. Sharp ratio, what it is? ER minus, can you see? Right, ER minus RF divided by standard deviation. Okay, ER minus RF is given, nothing is given. Sharp ratio is given, yes, 2 is given. ER minus RF is not given. Standard deviation is given. Okay, ER minus RF divided by standard deviation. How much is it? 1.5, right? Sorry, 11.25. So how much is my ER minus RF? It is 11.25 into 2. Okay, 11.25 into 2. It is 22.5. Okay, now what I need to do with this ratio? There is also another ratio given here, that is trainer ratio. We'll try to put that ratio there. Okay, ER minus RF can be substituted there. How? ER minus RF divided by beta is my trainer ratio, right? I assume that you have studied portfolio chapter. Now what is my trainer ratio? My trainer ratio is 15. My goodness, 15. ER minus RF is how much? 22.5. Beta I don't know. Okay, so what is my beta? Beta is 22.5 divided by 15. That is equal to 1.5. Okay, my beta is 1.5. So how much will my equity share come down? It will come down by 5%. It is, the market is going down, no? So 1.5 into 5% into 5. My share will go down by 7.5%. My goodness me. So what is my equity shares? 70 rupees into minus 7.5% will be my equity shares, right? So how much will I get? 70 minus 7.5%. I'm getting it as 64.75. Now I need cash balance. Since here the average annual cost is given here, Okay, annual cost is given here, so we need to find it for 1 year. Okay, 1 month. Okay, so how we'll do it? 0.71 is the total. Is the total, right? 0.7 is the total. Now what we need to do is 3 divided by 12. That will be my 1 year, 1 month, right? We need only for 1 month. Okay, for per share. Okay, 3 rupees per unit. Okay, per unit they have given here. Okay, so 3 divided by 12 minus 0.71. I'm getting it as 0.46. What is my net assets? It is plus 64.75. I'm getting it as 65.21. Right. So this is my net assets. Net asset value only, no. This is my NAV, net asset value, because I don't have any other figure. So this, I don't have my units, total units. So I did not do it. So what is my NAV? It is 65.21. It was so easy, just a little bit tricky, but you can do it. For K mutual fund, you can do it on your own, right? It is the same thing. You can do it on your own. So did we get the answer? 65.21, right? We got the same answer. 65.21. Okay, 10th is very much easy. Okay, you just have to calculate front end and back end. Okay, now we just have 2 questions left. We will now look at question number 11. Okay, so what it is, we'll see. It's a good question. Okay, it's a special question. We'll see how it is. Okay, based on this question, we have concepts in the concept book also. On 1st April, an open-ended scheme of mutual fund had 300 units, like units, outstanding with net asset value of 18.75. Okay, so what information given here is, it is an open-ended scheme. Okay, so it is not close-ended like equity shares. In the last question we saw that it was equity shares. Okay, close-ended means what? It is similar to equity shares. Open-ended scheme means normal mutual fund which is traded in the market. Okay, and its opening NAV is given as 18.75. At the end of April, it issued 6 lakh units at opening NAV plus 2% load. This is entry load. Okay, it will be added to the issue price, adjusted for dividend equalization. Now this dividend equalization, I'll explain it to you. Okay, what it is, I'll explain it to you. See, what is dividend equalization? We have to read this topic. Okay, issue price and repurchase price of mutual fund. Okay, issue price per unit, how do we calculate it? It is NAV plus entry load. Okay, and repurchase price NAV minus exit load. Okay, what is this dividend equalization? I'll tell you. Now we'll take an example. Let's suppose we have 300 unit holders. Okay, let's suppose we have 300 unit holders. 300 unit holders. Okay, we have 300 unit holders, right? 300 units we'll have. Okay, so we'll prepare a column 1, 2 and 3. Okay, so this is my units and this is per unit income, and the third one is total income. Okay, now what's happening here is, let's suppose on 1st April, okay, here I'll put date. On 1st April, what is happening is that we have existing holders. Okay, we have existing holders as 300. Okay, and the income it is not received till now. Okay, on 5th April, what's happening is that we are getting dividend. Okay, this is an hypothetical example. Okay, don't come and argue that why have you taken 5th April? 5th April, do we get dividend or what? Okay, we don't need that. Okay, it is just an hypothetical example that we are getting dividend income of how much? Let's suppose 22,000. Let's suppose we are getting income of 22,000. Okay, we are getting income of 22,000. So what is the dividend that we have to, what is the per unit, income per unit? It will be divided by 300, right? So how will we do it? 22,000 divided by 300. divided by 300. Okay, so it is coming to 73.33, right? Okay, so this is the income that normally gets distributed. Okay, now what is happening here is that on 30th April, new issue has been made. Okay, new issue has been made. Okay, let's suppose 6 unit holders are being added. Okay, 6 holders are being added. Now what is happening on 5th May? Now this is a hybrid scheme, so they have also invested in bonds. Okay, they are getting interest. Okay, interest of, let's suppose, 20,000. Okay, what is the total number of units? It is 306. Okay, 6 has been added to it. Okay, now this 20,000 units divided by 306. Should we give each of them 65.35? Is it fair? He has only held the securities for how many days? For 5 days. Okay, and he is getting 65.35 equal to the previous holders. Okay, they are holding it for 1 year. Okay, so this is not fair, right? So what they are doing is, how should they give? They should give pro rata, right? That 6 for 5 days, how much is getting? Okay, and for 300 days, 300 unit holders, how many days they are getting? They should pro rata it, right? So this is one method, but is it possible? Because every day some unit holders will be added. Okay, so we cannot take everyone. Okay, we cannot give everyone pro rata basis. Okay, for the number of days, it's very much confusing. So what we'll do is that, up to this point, if I take an amount here, okay, to equalize. Okay, so if up to this point, if this guy 6 holders pay an amount, okay, okay, let's suppose he pays an amount, okay, so that they become equal. Okay, so that they become equal up to this point. If he pays the income, okay, let's suppose he also pays 73.33, okay, then he will be equal to this, right? Because he is getting this income. Now he is also paying this much amount. Okay, so when we give dividend of 65.36, okay, when we give 65.36, he is equalized. Okay, this interest is equalized. Okay, he will get the equal amount because we will refund this amount. Okay, so how much did he effectively get? Okay, the income part, he got only how much? 73.3 minus 65.36. Okay, he had to pay 7.94. okay, extra he had to pay, but we refunded how much? 6.36. okay, so like that we do. Okay, what do we take? We take the previous income. Okay, we take the previous income. So and this amount is known as dividend equalization. Okay, this amount is known as dividend equalization. Now we'll continue the example. Okay, on, let's suppose, 30th May, some holders are repurchasing, some holders are redeeming their amount. Okay, let's suppose 10 holders are withdrawing their amount. Okay, we have to repurchase. So if they are going out of the scheme, okay, so they had a certain portion with them, right? They had certain portion with them accrued. Okay, the interest was accrued. the dividend was accrued, but they will not get, right? The next equalization date is later. Okay, let's suppose it is on 30th May, 30th September. Okay, so they will not get the amount, right? So we are paying them upfront. Okay, so we are paying them upfront so that we can settle them. Okay, we'll pay them their share. Okay, let's suppose it is an X amount. Okay, and we'll pay them. Okay, so that when they go out of the scheme, other holders will get their share and they will get their share. Okay, so they will get their share if they leave the scheme. Okay, so this is also dividend equalization. When they leave the share, they will get paid, right? So it will be added because we are paying them more. Okay, that's why in both the case we add it. Okay, if you see here, NAV on date of issue, entry load is added. Okay, let's suppose this entry load is your flotation cost. Okay, like flotation cost it is, we add it every time. Okay, and here we less it. Okay, it is like flotation cost, exit entry load and exit load is like your flotation cost. Okay, so go with that logic. Next, your dividend equalization, since we are collecting from the issue of units, we'll add it, and here we are paying back them. Okay, so then also we'll add it. Okay, now there is a calculation here, we'll see it with the question. Okay, this calculation part is derived from the question only. We will see question and we'll understand it. Okay, now we'll read it further. At the end of May 3rd, 3 lakh units were repurchased at opening NAV less 2% exit load adjusted for dividend equalization. At the end of June, 70% of its available income was distributed. Okay, now until this point it was not distributed. Okay, but on June only they are distributing. Okay, June only they are distributing. In respect of April to June quarter, the following additional information are available. Okay, what is available? Portfolio value appreciation has been happening. Okay, this we will use for net assets calculation. Income for April, May, June. Okay, this will be used for dividend equalization. You are required to calculate income available for distribution. So how will we calculate income available for distribution? I've already solved it. I'll show you. Okay, so income available for distribution, we have to prepare a table. So what is the table? It is number of units and per unit income. Okay, per unit income how much, and total income how much is it coming. Okay, so we'll prepare a table. Okay, right, this is my table. Now what we are finding here is income available for distribution. Okay, so this is the income earned. Okay, this is not income distributed as and when received. Okay, they will distribute when at the end of June they are distributing 70%. Okay, till then it is accrued only. Okay, accrued interest part, how much is it? So how many mutual fund holders are there? 300 lakhs units are there. Okay, so 300 lakh units we are putting it. And what is the income earned in April? It is 22.950. Okay, 22.950. So how much is the one unit income? 22.950 divided by 300. Okay, it is 0.0765. Okay, so that amount I have written here. Now what is happening here is, in question if you see, at the end of April, that is on 30th April, 6 lakh units of opening NAV. Okay, 6 lakh units are issued. Okay, 6 lakh units are issued. So we have to do dividend equalization, no, or else the means they will also get the same amount. They should not get the same amount. Okay, so what we'll do is that we will collect dividend equalization from them. If we collect this amount, they will be equal to 300 units, right? So we will collect this amount from them. Okay, 0.0765. If we collect, they will become equal to us, and when dividend is distributed, they will be equal to us. Okay, so 0.0765 is collected from them for 6 units. Okay, and the total income is added here. Okay, so this is collected. Next, income for May. Okay, income for me, it is how much? 34.425. Okay, 34.425. 34.425. Now we have to divide it with the unit holders. So how many units are we going to divide it with? 300 or 306? We'll divide it by 306 because 306 units are equalized. Okay, 6 units they have paid the amount and they are equalized. Okay, divided by 306. So it is coming as 11.25. Okay, 11.25, 306, 11.25 units. Okay, plus my earlier income 0.0765. Okay, what is my total earnings available? It is 18.9. This is the accrued income. Next, for June it is how much? 45.4590. 45.450, right? Divided by how many units? Now it is equal, right? 306 units. We have to divide it. Okay, so what is the per unit income? It is 14.85. Okay, sorry, before that we have an adjustment here. Okay, at the end of May 3 lakh units were repurchased. Okay, this June thing you forget. Okay, now it is given here that at the end of May 3 lakh units were repurchased. Okay, 3 lakh units were repurchased. So means what? 3 lakh units are redeemed. Okay, at the end of May what is happening is that 3 lakh units are being repurchased. Now what is that means 3. Now they have how many shares in them? Into 0.189. Okay, this is their accrued share, so we have to pay them. Okay, so 567 we'll pay them and we'll deduct it with the total amount. So how much I'm getting? 57.267. Okay, so this is the total units available for 303 unit holders. Okay, they are just taking their share away. Okay, this is the simple funda. Next, income for May 45.45. 45.45. Now this will be distributed with the available unit holders. That is how much? 303. Okay, because 3 have repurchased. Okay, 3 have redeemed their share. So it is 0.15 per unit. Okay. Now we have to add it with the existing plus 0.189. Okay, so we have 0.339 as the total. Okay, as the total we have 0.339. Okay, now what is happening here is at the end of June 70% of its available income was distributed. Okay, 70% of its income was distributed. So what is happening here is that total how much is it? 57. So now what we are doing is that what is the available income with us? 57.2670, right? So we have to distribute 70%. So into 0.7. Okay, so 40. No, we had extra income, right? So 57.267 plus 45.45. This was the income added, 102.7170. Okay, now what we have to do is we have to distribute this income into 70%. Okay, so 71.9019. Okay, so how many unit holders are there? 303. So what is the individual part? One income part is 0.2373. Okay, we are distributing them. Okay, we are distributing them. And what was the earlier part? It was 0.339. Okay, so this much amount is left with me per share. Okay, 0.1017. Okay, end of the June we have this much income with me, 30.8151. Okay, so this is the income distribution table. Okay, now what we are going to do is issue price at the end of April. Okay, now we are finding out issue price. What is issue price? Issue price is here. They are given in question, right? At the end of April, 6 lakh units at opening NAV plus 2% load adjust for dividend equalization is being given here. We have calculated dividend equalization. We will add it. Okay, and entry load is charged 2%. We will add that also because it is flotation cost. We will collect from them. Okay, and 6 lakh units are issued at opening NAV. Opening NAV is how much? 18.75. So if we calculate it here, 18.75, okay, plus how much is the entry load plus 2%, right? So we'll add it, okay. And how much is the dividend equalization? It is 0.0765 plus 0.0765. Okay, 19.20 the total amount is coming, okay, per unit. And how much is he buying? Is buying for 6 into 6. So 115,209 we have to collect it from him. Okay. They are just asked issue price, okay. It is 19.2015. So it is matching. Next what they have asked is repurchase price at the end of May. Okay, now we have to calculate repurchase price. Repurchase price is what they have given in question. At the end of May, 3 lakh units were repurchased at opening NAV only, less 2% exit load. They have given here in question that exit load we have to minus and adjusted for dividend equalization. Dividend equalization, since we are paying them, we have to add it with it. Okay, do not mug it up. Okay, first we have added, we have to less it now. No. Okay, dividend equalization, we are paying them. Okay, so we have to add it. So 18.75 is the opening NAV minus 2%. Okay, we are collecting from it. Okay, plus what is the dividend equalization we calculated in the question? It is how much? 0.189. Okay, plus 0.189 was their share we gave them. Okay, so how much is the repurchase price? It is 18.5640. See, 18.564. Okay, next what they have asked here is NAV as on 30th June. Now NAV we will calculate. How do we calculate NAV? How do we calculate NAV? We calculate NAV by using this step. Okay, market value of investment in securities. Okay, double X plus. Okay, this is the basic funda. Okay, we have been given here in question that if opening NAV is available, then closing NAV can be found out by this. Okay, opening NAV is given in question, asset and liability details are not given. Okay, and we have to find closing NAV. How we will find opening NAV? We'll put, okay, number of units into opening NAV plus investment portfolio appreciation. Okay, very much basic work. Okay, we are doing this only. Okay, market value only, add accrued income. Okay, plus closing cash balance, we are doing that only. Okay, so what happens in closing cash balance here? See, we receive income received on investment of securities. Okay, and income received on issue of new units minus income paid on repurchase of units. That is all we do. Okay, so basically we are doing this only, net assets only, but here they have Ajay Agarwal sir has given a separate thing for it. Okay, we need not by heart this one. Okay, if we understand the logic of cash balance and this opening NAV calculation of net assets, we'll be able to do it. Okay, we'll do it by logic only. Okay, so how will we do it? Now first we have to calculate net assets, right? For that income, for that investments at net value. Okay, at the current market price. So how will we take it? Now what is the total portfolio value? We had 300 lakh units, right? 300 lakhs into 18.75. Okay, it was my opening NAV. We'll take opening NAV. 18.75 into how much? 300 lakhs. So 5625 was my initial portfolio value. Okay, plus how much is the value appreciation? It is 425 plus 425.47, right? So this is my total value of shares. Okay, my market value. Okay, now we have to add, now we will find closing cash balance. Now how we will find closing cash balance? Did we have any opening balance? No, we didn't have any opening balance. Okay, we didn't have any opening balance. So I'll just write it and show you. Okay, we are just calculating what net assets, right? Net assets we are calculating. Okay, first we are finding what value of shares. Okay, value of shares. First we are finding value of shares. Okay, opening NAV into my number of units. Okay, how much is it? 300 into 18.75. It is how much? 5625. And we have appreciation. How much is the appreciation? It was 425.47. It was given in question, right? Okay, this much was appreciated. Okay, so what is the total amount? 605047. Okay, this is my value of shares. Okay, now what we need to do? Closing cash balance, right? Now how do we find closing cash balance? Now what all the cash we are getting is there? Now we are finding what? Closing cash balance. We'll put a working note here. Okay, so do we have any opening? No opening is there. Okay, no opening is given in question, so we'll move on. Next, what is the income we are getting? See, this is all the income, this is all the cash we are getting, right? So I am writing here income. Okay, so I'll just write it total 22.95 plus 34.425 plus 45.45. Okay, this is the total income I'm getting, right? This is all the income, right? 22.95 plus 34.425 plus 45.45, right? So I'm getting it as 102.825. It is the total income. Now we would have gotten this also. Okay, when we are issuing units, we would have gotten something. Okay, issue of units. Issue of units, how much we are getting? How much units? 6 into this, all in rupees in lakhs only. Rupees in lakhs. Okay, now 6 into what was the issue price? It was 19.2015. Okay, 19.2015. Okay, this we will add. Now it is 115.209, right? Now this will be added. Now repurchase. What? How much? 3 units into what was the issue price? 18.564. 18.564 was my redemption price. Okay, so I'll pay them this much. It is going out of my hand. It is going out of my hand and cash is going out. So we are reducing it. Minus. It is 55.692. Okay, it will be in minus. Next. Now, what all the next thing it is going? Okay. At the end of June, 70% of its income was distributed. Okay, income distribution. Income distribution. Okay, it is going out of my hand. No, how much is it? 70%, right? So, how much is it? We calculated, no, in the question. In the figure we calculated. How much was it? Dividend distributed. 0.2373 was the per income, right? 0.2373 into how much? 303 units. .2373 into 303 units, right? So it is 71.9019. Okay, this we will minus. Okay, this is what has gone from my hand, right? There is no other adjustment. Okay. Now calculate closing cash balance. Okay. Closing cash balance, how much is it? 102.825 plus 115.209 minus 55.692 minus 71.9019. Okay, it is coming as 90.4401. Okay, now we'll add it with this. Add it with 6050 plus 6050.47. So 6140.9101. Okay, this is my net assets. Okay, this is my net assets. Now how will calculate NAV? They have told what? NAV. NAV as on 30th June is equal to 6140.9101. Okay, divided by how many units are we having? 303, right? Divided by 303. It is 20.2670. So are we getting the same answer? 20.2670 exact. Okay, so this was a good question. Okay, this was a good question, but it is very much easy if you understand the logic, right? So next question we'll see what it is. It is question number 12. It is a nice question. It is based on reverse calculation. We'll see how it is. Okay, so this much is the question. We'll see. Now, an asset management company of the mutual fund has declared a dividend of 9.98% of the units under the dividend reinvestment plan for the year ended 31st March 2025. Okay, now the investors are, now this is a case of dividend reinvestment plan. Okay, whatever dividend they are getting, the company is getting, they will reinvest in the securities and they will reinvest in the mutual fund and they will give it as units to equity shareholders. Okay, so this is the basic funda of it. Next, the investors are issued additional units for dividend at the rate of closing NAV. Okay, so we will use closing NAV as the rate. Okay, additional units for the dividend for the year as per the conditions of the scheme. Now the closing NAV of was 24.95. Okay, now this additional units will be issued for the dividend at the rate of closing NAV. Okay, we will use closing NAV. This closing NAV is available for us. Sorry, the investors are issued additional units for the dividend at the closing rate of NAV. Okay, the closing rate of NAV is given. An investor, Mr. X, who is having 20,800 units at the year end, has made an investment in the units before the declaration of dividend and at the rate of opening NAV plus entry load of 0.04. The NAV has appreciated 25% during the year. Okay. Now what is happening here is Mr. X is having 20,800 units at the end of the year. Okay, we do not know how much did they have in the beginning of the year. Okay, at the end of the year he is having 20,800 units. Okay, now this units, he has made an investment in units before the declaration of dividend. Okay, before the declaration he made the units. Okay, he invested in the units and he is having 20,800. So what they are asking is at the rate of opening NAV plus entry load of 0.04. Okay, so now they are asking as the his issue price was, entry load was 0.04 and opening NAV is not given. Okay, now the NAV has appreciated 25% during the year. Okay, so now what we need to find is that assuming the face value of unit as 10. Okay, this is very much important. Okay, face value is 20%. Now we have to find opening NAV. How we will find opening NAV? Since the NAV has appreciated by 25% during the year. Okay, so how much will be by NAV? Opening NAV. Opening NAV is equal to how much? 125% of closing NAV. Sorry, I don't know this one. I know cross multiplication only. Okay, let's suppose opening NAV we don't know. Okay, closing NAV, it is 24.95. 95. Okay, since this is 125%, closing NAV is 25%, no, plus 25%, no. So what is 100%? We have to just cross multiply. 24.95 divided by 24.95 into 100 divided by 125. So I'm getting it as 19.96. Right. So this is the opening NAV. Now what is he doing is that opening NAV plus entry load of 0.04. So what is the entry load? Entry load issue price we are calculating. Issue price, how do we calculate it? Opening NAV plus your entry load, right? So what is my opening NAV? 19.96 plus my entry load is 0.04. It is 20.00, right? Or entry load was 0.04. So this is my opening NAV and this is my issue price. Okay, we got it. Now what they are saying is number of units purchased. He had 20,000 units. He had how much? 20,800 units at the end of the year, right? Now what they are asking is number of units purchased. So how much units did he purchase? We'll assume let the units purchased be X. Okay, so X was the unit purchased, but you would have gotten how much? The dividend also. Okay, dividend means what? The dividend has been reinvested and you must have gotten units. Okay, so this is the end units. Okay, so how much dividend did he get? Okay, he got how much? 9.98%. Okay, 9.98% of what? Into 10. This is my face value, right? 10 is my face value. Okay, you would have gotten this much divided by what was the total amount? It was closing NAV we have to take. Here they have clearly stated here that the additional units are issued for dividend at the rate of closing NAV. Okay, closing NAV is how much? 24.95. Okay, so this much is the amount. Okay, now what we are doing is that we'll solve the equation. How we'll solve it? 9.98 into 10% into 10. 9.98 divided by 100. If I do, I'll get in decimals. Okay, into 10. So it is 0.998 divided by 24.95. Now for my convenience, I'm taking this X as in the this side. Okay, 20,800 minus X. Okay, since here it was in plus, I'll do it in minus here. Okay, now this is the equation we are getting. Now what? Now we can solve this. 0.998 divided by 24.95, right? So I'm getting it as 0.04 is equal to 20,800 minus X, right? Now what is X value? X will take it here. Okay, X will be in plus and 20,800 will be here, and we'll, since this is in multiplication, if it goes here, wait, am I doing it right? See, okay, so here we made a mistake. Okay, we made a mistake here. 0.998, how many units? Okay, this is not just one unit. We are not calculating for one unit. This X will be your factor here, right? So 0.998X here will become. Okay, so we cannot do this. Okay, this step is cancelled. Okay, so 0.998X, because so 9, this is for one share only. This NAV 10 is only for 1 unit, right? This is only for 1 unit. So for 1 unit, 9.98%. So how much is for the total units? Let the unit purchase be X. Okay, for the unit purchased, you would have gotten all of that. Okay, so what we'll do, we'll take it to the other side. Okay, so 0.998X is equal to 20,800 minus X into what? 24.95, right? So we'll solve it. 24.95 into 20,800, it is 518,960 minus 24.95x is equal to 0.998x. Okay, now we'll take x and x together. Okay, now this is in minus, here it will come in plus. Okay, 0.998x plus 24.95 x is equal to 518960, right? So if you solve this, 0.998 plus 24.95, I'm getting it as 25.948 x is equal to 518960. Okay, x is equal to 518960 divided by 25.948. Okay, so I'm getting x as 20,000. Okay, I'm getting x as 20,000. Now what is the third? What is the original amount of investment? They are asking. Original amount, how much is it? My unit purchase is 20,000. Okay, and the opening NAV, we have calculated issue price to 20 into 20. So how much is it? 20 into 20,000, it is 4 lakh. Okay, rupees 4 lakh was invested. Okay, the question is solved. It was a good question. It was a reverse calculation question. So practice it once, you'll be able to do it. Okay, so that's it for today. We have completed net asset value, okay, of mutual fund. All the questions are covered. Okay, I have taught you all questions. So practice it well. Tata, bye bye. We'll see in the next lecture. We'll start with return of mutual fund. It is very much easy. We'll start with it. Okay, tata, bye bye.